Good morning. It's Thursday morning, 8:30. How's everybody doing? The last week of the month. And how has everybody's July been? Kind of looking for a big kickoff to the second half of 2021. I remember talking about July 4th landed on a Sunday, and I did an article on that day, and I remember thinking about and talking about how July 4th basically divides the year in America. A couple, 3 days before that, the 6th month ends, and it's a wonderful time of year for people that are in financial reporting and taxes, because you basically have this nice, clean half-year break. You can take a look at somebody's first 6 months, and if they're in the kind of business that has steady production or steady revenues, they can fairly accurately estimate what their second half's going to be. Now, of course, I believe that over half of my clients, and I'm sure a large majority, well, let me not say large majority, but I'm at least a large cross-section of you out there are in the kind of business that is basically scaling up. You've been working hard at it to get it going for the last maybe 1 year, 2 years, 3 years. And maybe also I've got people that do outdoor work or, work with their hands or other kind of labor, driving, that sort of thing. And, the first 3 months of the year aren't so hot because, it's colder. They're not able to do things. Anybody that digs, you get the permafrost here in the Rocky Mountains, Colorado, Wyoming, Montana, so Utah. In any event, for a lot of my folks like that, they really start having their best success in April. But in any event, I want to wish you all a hopefully very prosperous July reporting, because that's coming in just a couple, 3 days. 31st lands on a Sunday. Everything's on a Sunday. I'm so sorry. It's a Saturday. I looked at my calendar. So that's kind of nice, because I think of weeks as ending on Saturday because it's the end of the week on my calendar. It's all the way on the right. So it's just kind of logical, right? So in any event, I'm hoping everybody's having a great July. And I kind of got off on a little bit of a tangent here. Let's jump on today's topic. And the reason that I hope you're tuning in, I'm looking down at my phone real quick. No comments. By the way, if you have any questions about anything, type them in. I'll look down periodically and see if anybody's got anything to say. And right now, it doesn't look like it. So, see. Oh, wait a minute. One thing here. Oh, here we go. I'm looking for the comments on another page. That's okay. Forget all the tech stuff and let's just talk, okay? So, one of, if not the biggest deduction for many of my people, realtors in particular, but anybody that has to go to somebody's home to do what they do for a living, is going to be their car. And the Internal Revenue Service allows one of two different methods to write off vehicle expenses. It's an ordinary and necessary expense of your business. So first things first, if you use it just a little bit, like we do, my wife and I once in a while will go to the post office actually to mail something that's got to go out quicker than our mailbox, that kind of thing. So we might have maybe 100, 150 miles a year, if that. And we basically use what's known as the standard mileage method. All you have to do is keep a log of the trips that you take. And if you drive a lot, just get one of those apps. I'm going to recommend a couple. Well, yeah, I can think of a couple, and I'm not sponsored by anyone, so this is a disclaimer. This is not a paid advertisement. But Mile IQ, MILE-IQ, just like it sounds, provides a very nice, clean-looking Excel spreadsheet report, which accountants love, of both your total and your business miles, which I need to do your tax return. Also, if you have QuickBooks Online, you can actually download its app, and you can track your miles with that as well. So standard mileage works. Basically, your government has baked in the costs of depreciation and maintenance, as well as gas, oil, etc., all that stuff, into a figure Now, inexplicably, despite the fact that the consumer cost index keeps going up every year, they keep messing around with the standard mileage rate, and it sort of goes down. As a matter of fact, it has been on a downward trend the last couple of years. In 2021, it's 56 cents a mile, and they actually dropped that 1.5 cents. I'm sure if I cared about the calculation, I could go out and find out why they're doing that. And I'm not super happy about it, but nevertheless, it is a way to write off a significant amount of your mileage. Let's say you got 12,000 miles on your car, which is pretty typical. Average American, if there is such a thing as average, puts about 1,000 miles on their car every month. So 12,000. Let's say you roll up 4,000 miles. So at 56 cents a mile, I could tell you, I think that's going to be about $22.40. It might not be right, but it's within $100. And that's quite a bit of money that you're writing off. So it's important to keep that log. One more thing I'll tell you, you have to have evidence of your mileage to take the standard mileage. Now, if you are going in to do your taxes or you're coming to me to do them and you don't have that log yet, but you're confident you know the amount of miles that you did drive, you can provide that to someone and just make sure that you create that log at some point for your records immediately thereafter. Okay, it's important to do that because if you're audited, you better produce it or they're going to take it away from you. So that's standard mileage, and it's pretty standard, right? So the other one is called the actual expense method. And actual expense is just like it sounds. It's everything that you spend on your vehicle to keep it in operation that is multiplied by your business usage percentage. So I would venture to say that a guy with a really nice car, let's say a Beamer, I don't know. I see a lot of them around here. Uses that to do his house showings as a real estate broker associate. But it's a nice car, and he's going to take it to the club on the weekend and, maybe drive it over to a relative's house, let them know they don't have to worry about him, he's eating well. So what you need to do, and basically the way to figure out the business use percentage of a vehicle is its mileage. If you get that 12,000 miles, and let's say you run up 10,000 miles for business, then that's basically 83%. So now I usually do that in whole fives, so 75, 80, 85, 90%. The Internal Revenue Service is used to seeing it that way. That's fine. The reason I'm over-explaining this, it's important to understand that. If you spend, just use a nice round number, $50,000 on a car, and you use it 80% for business, then you're basically only writing off $40,000 of the vehicle. I'll explain that in a minute. But first, let's go with that $50,000 and 80%. So you put your car into service. First of all, you've bought it, so you've got down payment. You got your closing document from the car dealer. It's got all those fees and everything. So what I want to explain here is that you are able to write off the entire cost of acquiring the vehicle in depreciation or over a 5-year period. So let me stick a pin in depreciation. I'll get to it last. But once you've taken it off the lot and you've got your closing document and all that stuff, then next thing is you've got to buy it stuff. It's like a kid, right? You got to care for it and feed it. And gasoline, you got to go down to whatever your motor vehicles department is in your state. Got to get your title transfer done, tax, registration, all that stuff. All those things are actual expenses and they count, okay? So your annual registration counts, your car insurance counts, okay, your tires, your maintenance, gasoline, parking, tolls, anything having to do with that vehicle, you multiply it by that 80% and you get to write that off. So let me tell you why you may want to do this instead of the standard mileage method, which sounds easier. The answer is depreciation. Told you I'd get back to it. So when you depreciate a vehicle, basically you are writing down the cost of putting it into service over and for automobiles it's 5 years, okay? That's just the way it is. There are different lives for other fixed assets, but we're just talking about cars today. So 5 years. There are bonus depreciation methods, other ways to write off the entire cost, but there are certain things that you have to do to make that happen. Let's not deal with that here. Let's say you are writing off your vehicle over a 5-year period. You're doing something called double declining balance. So to make this easy, let's say you got a car, you're writing it off over 5 years. What is 5 divided into 120, right? So 20% of your vehicle. So what you do in the first year is you write off 40%, okay? Double declining balance. And then whatever's left over in year 2, you write off 40% of that. And in year 3, 40% of that. Now, why would you want to do that instead of standard mileage? Let's say you buy a nice car because it's important for, status or marketing or other optic reasons to have a nice vehicle in the business that you do. If you say spend upwards of $80,000 or $100,000 and you write off 40% of that in the first year, that's $40,000. Now you're not going to get that in standard mileage, so that's the reason why. Okay. Now a good tax person will take a look at the entire situation, your mileage, which we kind of need to calculate your business use percentage anyway. Okay, I'm looking down, no comments yet. Questions, I mean. If you have any questions, pop them in. Where was I? See, squirrel moment. In that first year of depreciation, nope, that's not what I was talking about. I'm sorry, you guys. I almost need to rewind this. Where was I? Okay. The main thing is this. You have 2 different methods of writing off a vehicle, standard mileage or actual expense. And the thing that I was talking about, I knew it would come back, is that a decent tax person won't just pick one and run with it. But basically, what I do for every one of my clients is I take a look at the situation in the first year that they purchase a vehicle or their first year with me as a client. And I want to see which one's going to save them more money, which one's a better write-off. If standard mileage writes them off $2,400 and actual expense writes off $4,000, we need to do actual expense. Now, let me add one last thing to that. Actual expense means that you're depreciating a vehicle. So once you begin doing that, you must continue to use the actual expense method for the life of that vehicle or as long as you're in business, whichever one's shorter. Okay? So once you choose actual expense, in other words, you're kind of marrying yourself to it. But of course, you can get a divorce from it a lot easier than a real one by just simply selling the car. Or if you do go out of business, of course, then it becomes a moot point anyway. So does anybody have any questions about any of that? Fun stuff. I was told if I went online during business hours in the middle of the week that people would actually be on here watching this. So I'm not going to say that I'm disappointed because I know this is in a replay and you can always ask questions later. This is being posted to my business page, Owings LLC, but you're also seeing this on LinkedIn or my private group, Winning at Business and Taxes. And private group, all you need to enter that is just to go to it and ask to, I don't know what the button's called. I can't remember. Join or whatever. Let me look real quick, actually. It's embarrassing. I don't know this as much as I'm on Facebook. I guess it's just join. Oh, we got a couple new people. Yay. Good. All right. So, yeah, pick the join button. There's 3 simple questions. A quick tip, if you watch this far, I'm going to let you in on a secret. If you don't answer every single question, I'll let you in anyway. But you should answer the second question. Would you like a copy of my free book? And give me an email address because It's still free, and I'm probably going to continue to give it away until I do an update on it. I'm going to add some spreadsheets and other supplemental guides to it sometime in the near future, and then I'm going to start charging for it again, so it won't be free forever. But the thing is, if you have in the past kind of seen me pop on my personal page and talk about fun things like taxes and all that stuff, and have been missing that and realize it's because it moved, all you gotta do is join the group and it'll be back in your feed again. So it doesn't cost anything, and I'm very happy about giving free advice and helping folks out. And if you've got simple questions I can answer by typing a couple of short sentences, then I'm very happy to help you. So I believe with that, let's see, I'm going to take a look down. No questions yet. So let's go ahead and wrap up for this week and do something randomly kind. And I hope you guys have an amazing end of July. It's 3 days to go, and it's been a good month. And if you're someplace where it got ridiculously hot like it did here, 91 for the high today, stay cool, okay? So until next time, we'll see you soon. Bye for now.